What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session where we had this absolute textbook unicorn entry after sweeping relative equal lows from the Asia session, taking us into a premium of yesterday's New York AM session range, bagging a really nice 3.3R. Before we jump into the session, I want to take note of something that I've noticed this week. That is that the first hour of the London trading window seems to be doing nothing, because we are in daylight savings time here in the UK. So the ICT London session is 2 AM till 5 AM New York time, which prior to daylight savings was 7 AM until 10 AM UK time. Now I'm in daylight savings time, I'm having to come to the screen at 6 till 9 to match the ICT kill zone. However, what I'm finding is that this 6 till 9, this 2 AM till 5 AM, first hour seems to be a wasted hour. Now my theory behind this is that London traders are still coming to the screen at 7 AM. So therefore, is the London session really in this daylight savings time starting at 3 AM till 6 AM? I've noticed this all this week. So this is the first week of daylight savings time, and all of this week essentially the first hour has been a waste of time, and then as soon as 3 AM starts we start getting our volume and some movement into the market. And what's frustrated me today is I've missed out on this entry because I stopped trading at 5 AM and this entry happened at 5:08, so just outside my trading window. Now if I continued trading the London session based on London times, 7 till 10, this would have been an entry because this is within my 10 AM window. My trading window would stop at 6 instead of 5, so I would have taken this. So it's just got me thinking, while we're in daylight savings time, is it worth continuing to trade 7 till 10 UK time as opposed to adjusting for this? Because how many New York traders are trading at this time? Are they really affecting price? I would imagine that the volume is when London guys come to the markets, which is still going to be 7 AM. Anyway, food for thought on that, just something that I wanted to point out. So we didn't get an entry today, unfortunately. There was two potential setups. This one risky, not really something I was interested in, but I'll break you down the analysis for you. And then the second one, textbook, super trade, just fallen outside the 5 AM window, so I didn't take it. Let's jump into the high time frame analysis now and see how these trades presented themselves. Let's start our analysis off on the 15-minute time frame as always, where we can see our session liquidity tracker showing us untapped session liquidity at the New York PM session high, New York PM session low, and the Asia low currently untapped. Large move yesterday, putting in a high in the New York AM session, and we have pulled back. Links to all of the indicators that I use are in the description down below, along with a quick video showing all of my settings. So if you want to replicate my charts, you can find details down there. We will pull a fib from yesterday's high to the current low that we put in. So we're currently trading inside this range from the New York AM session, consolidating in a discount at the moment. So we can see 50% here marks the premium area and the discount. As per ICT's teachings, we're going to be looking for long positions in a discount and short positions in a premium. Let's mark out our various PD arrays that we can see. We'll have a 15-minute fair value gap below us, put in the Asia session. And obviously a larger 15-minute fair value gap, which has been tapped once already, was from the New York AM session. We can see our trading window is going to be starting at 2 AM. We've swept the Asia high, so there's a potential for a reversal at this point. However, prior to the session starting, we're very close to taking the New York PM session high. So I'll be very hesitant to take shorts here. If we had swept this high and pulled back into the range, then yes, I would certainly be more interested in a short position. But as it stands, we've pumped up and we are just failing to take this high. This to me really could be classified as relative equal highs. There are only a couple of pips difference between the two. Therefore, I would ideally want to see a sweep of this high, potentially filling in or rebalancing this inefficiency before looking for any short positions. As I mentioned, initially, a move into a discount would be the best. Up there we have this 15-minute fair value gap. moving up into a premium, and we have a 15-minute fair value gap in that premium area. We've got relative equal highs here. So these two 15-minute candle wicks, giving us some buy-side liquidity. We can continue going higher. Obviously, we've got a new week opening gap up here as well, with a fair value gap there. So we've got areas of interest above the 50% level in a premium for a potential short position. We're looking for longs. We've obviously engineered some liquidity here. We've got lots of relative equal lows in this section of price action. And these relative equal lows are all above a 15-minute inefficiency. So consequently, this looks like engineered liquidity. We've got relative equal highs there, so we're currently inside this larger range. So I would be more tempted to be looking for a long position at this point, aiming to get us back into a premium where we could look for sells if that presents itself. In fact, I just want to check on the 5-minute time frame. What I've noted on the 5-minute time frame, inside this large 15-minute fair value gap, we have a 5-minute balanced price range. So we've got bearish fair value gap at this point, followed by a bullish fair value gap, followed by another bearish fair value gap. So we've got these three overlapping inefficiencies at this point. So I do want to take note of this area. Which is inside a 15-minute fair value gap, balanced price range, above engineered liquidity, the potential resistance zone at that point. Still, again, we are in a discount area as far as my analysis is concerned, so less likely to want to take a short position from this area. I would ideally like to see us get into a premium before looking for a short setup, so I'm more interested in going for longs as it stands at the moment. Let's start scrolling through the session now and see how things go. We are showing red news here, balance of trade on the euro. That is red news only on TradingView. It's not actually showing red news on Forex Factory. I do prefer to believe Forex Factory as opposed to TradingView. I am aware that we do have non-farm this afternoon or this morning in the New York AM session. Therefore, price action may be a little bit dodgy. We've also got PMI as well. So major red folder news in the New York AM session, which could affect price this morning. So any trades that I do take are going to be low-hanging fruit, aggressively taking profits. So let's start scrolling forward into the session now. So sweeping up, we've taken this sell side. We've still got the New York PM session, which is what I'm more interested in, a sweep of this. So we've taken the New York PM session here. I'm going to go to the 1-minute time frame as we sweep this. So again, low probability this in my opinion, because we are not in a premium of the higher time frame range. We're still in a discount. However, we do have resistance here. We've got a 15-minute fair value gap. We've got a sweep of session liquidity. So potentially there is an entry to come short. So we've bounced off the balanced price range at this point. Our breaker block isn't really until down here. Kind of consolidating, no move lower. Now we're getting an aggressive move coming down, so we're into the 3 AM candle. It's marked as red news on TradingView. Potentially that's for the driver to come down and take these lows. No entry obviously at that point. I'm not going to be looking for a short position off this breaker block. As I mentioned, it's too low down in the range. I wanted to see something further up, so this isn't the price action that would instill me with confidence. We can see 3 AM, so whether it's the red folder news driver or whatever is bringing volume in. So this first hour nothing really happened. Eyes are on this sell side liquidity that we have below us. So we failed to take that low. We've engineered more sell side here. We've got relative equal lows here, so we came down failed to take the lows, got relative equal lows again. So for me, we're building more sell side liquidity at this point. Aggressive move back up, so 303, we're pulling up, coming into the start of a new 15-minute candle. Not enjoying this price action, so again, not looking for a particular short position here. Created a high here, so we've got relative equal highs now. Failed to take the high. Taken that, so that's the liquidity taken there. Time wise, so we're at 3:30 now, so we've had half an hour since that news drop. Put in a high, coming back up to retest that high. So we've just swept that high there. We do have a liquidity sweep at this point, although, and we're back into a balanced price range, we haven't taken out the actual session high. Again, relative equal highs. At this point, it seems like we're engineering liquidity at the top side and engineering liquidity at the bottom side. Given that we're in a discount, I'm more interested in a long position to take us up into a premium area. So you could potentially look at this as a breaker block. We do have a high, a low, and a higher high. So we've come from this low, we've put in a high, we've put in a low, we've put in a high, lower high, higher high. So it's just swept this one, and then it's broken this low with a candle body close. So we have broken that structure there. This should have held if we were going to continue bullish. We've had a candle body close at that point. So we've closed through, we've left displacement lower as well, two bearish fair value gaps at this point. These down closed candles, potentially you could view those as a breaker block if you were interested in that. Again, I'm not interested in a short in this area, especially after we've engineered this kind of level of liquidity. But if you were very aggressive, 340, so we're coming up to the open of a 15-minute candle. 45. I'm just going to turn on my fair value gap indicator. You can see you've got a bearish fair value gap, a bearish fair value gap at this point. So two bearish fair value gaps. We have an order block. These are the last three down closed candles that created a new high. So you would say that those potentially would be a breaker. We've closed through the breaker with a candle body close, so that's what validates it now. That should have been an order block supporting price to go higher if we were on buy side. We are not, so we've got a failed PD array and we are leaving bearish displacement. We have a bearish fair value gap inside this failed order block. We are coming up to the open of a new 15-minute candle. One thing that, as I mentioned previously, that I've been monitoring is the 50% retracements after the breaks of structure. So bearish retracement on this leg here. So this is the leg that failed, leaving the breaker block. So again, I've seen some very interesting videos saying that the 50% retracement area is a significant area. So I've been monitoring these this week, so we can keep an eye on that level. We've tapped the 50%. We are at 341, an aggressive tap as well, so a big rejection. And then a big move down. So we can see there we had, again, let's just draw this price action. So we've tapped the 50% of this retracement leg here. So this is kind of the scalping strategy that I've seen Cami Capital talking about in his live streams. Come back, tap the 50%, and then price has accelerated away. So we have that move there. So really nice pattern coinciding with the breaker block, coinciding with fair value gaps. Is just before the open of a 15-minute candle. So again, wouldn't be interested in that, but it's just worth noting, something that maybe we can use moving forward. So we've left a fair value gap here, bearish fair value gap, and we now have a bearish order block. As we know from my previous videos, I'm trying to synchronize entries with the open 15-minute candles. So we've left this breaker block, we've tapped the 50% of this price leg, we've rejected away strongly, we're leaving a bearish fair value gap inside a bearish order block. This isn't the entry model again, I'm just noting what I'm seeing here. Coming down, we've left another fair value gap. Open of a 15-minute candle, so this is 345. We've tapped the bottom of the order block into a fair value gap. Price respects 50% of the fair value gap, so this is something that we monitor to see how strong fair value gaps are. So we can see we've respected 50% of the fair value gap. So monitoring this in live time just as a theoretical entry, when I saw this rejection candle here at 346, theoretically, I thought a break of that candle low, stop loss above the order block, target those relative equal lows, that engineered liquidity that we've got down here for a 2.3R, possibly into that fair value gap. So I did think that could potentially be an entry. It's not my entry model, not a trade that I took. However, I just want to document it because that was my thought process. We've had a rejection off a breaker block. We can see that bearish fair value gaps have been respected. We've come into a new 15-minute candle. We've respected another fair value gap here into an order block area with a big rejection wick. Looking for a continuation to take the lows. So again, low hanging fruit would be taking 50% of the trade off at 1-to-1. So we're closing 50% of the trade off, making ourselves risk free. So the 50% profit we take would cancel out any loss. We've only got half of the trade left, so 50% profit cancels the 50% loss. Aiming to run this down to that sell side. So that's how I would have managed risk on that trade. We pull back 353, we're back into entry again. Our stop loss has not moved, so we're still leaving the stop loss exactly where it is. You can see respecting the bottom of the 15-minute fair value gap still, so this higher time frame fair value gap. We'll see 4 AM comes, so this is the open of the 4 AM candle. So we've essentially had 15 minutes of consolidation underneath this entry, underneath our order block that we identified. And then as the new hourly candle opens, we get some volume coming in. Drive for the lows into that 15-minute fair value gap that we highlighted, sweeping sell side liquidity. So that would have been a 2.3 trade. Not the entry model that I've been looking at, as I've mentioned. We will be shorting in a discount, so not ideal. However, the setup did play out. So I just want to log that for future reference. This is more the play that I was looking at for a long position because we are in a discount. So I would like to take a long position from a discount into a premium, taking out this engineered liquidity that we've got up here. Just going to delete this. We obviously have this buy side that we've engineered breaking outside this range, so we've had a failure to displace outside this range. We've tapped into a 15-minute inefficiency, 50% of it tapped exactly, and then we're pulling back in the range. 405, so we're into a new hourly candle. So we're looking at 415. So again, let's monitor our market structure. Put this low, this high, low, high, low. That's the high that took that. That's the low that took that. We came back. That's the low that took that. That's the low. That's the high that leads to this low. So all of this price action is inside this price leg. So this is the low. So for a break of structure, it's there to there. So we've just broken this structure here at this point. So that's our break of structure. We're inside a fair value gap. So this 1 minute fair value gap that we had highlighted, where we're observing 50%. So we can see here that 50% of that fair value gap, so this is the fair value gap that led to the decline at 4 AM. That's now been closed through 50%, which means that this is likely a weaker fair value gap. Not nice price action. This would have been the breaker block. So these are the last two up closed candles that lead to this low. So we've established that that is the high down to this low. So these up closed candles here are our breaker block. But you can see that this is not the unicorn entry that we would be wanting. So the unicorn entry, we want clean displacement through the breaker block. We've traded inside many times on this, so this isn't the smooth aggressive move out of the range, aggressive move back in the range breaker block entry that I would be looking for. So I'm certainly not interested in taking this long at the moment. Aggressive move down, so coming back towards these lows. I'm going to delete that because we've swept this liquidity here. So another sweep of the low at this point. So we can see how this horrible price action inside that breaker block area, not the kind of price action we were looking for. So we've got a clean sweep of this low now. Again, back into the 15-minute fair value gap. It's still being respected. We're not closing through that 15-minute fair value gap. Taken the low. So this is now more of the price action that I'm liking to see. We've had an aggressive move out. We've left this area. So this now is an order block. It's closer to this swing low. So if we can get a move out and then a move through that, that's much nicer price action. If we take this low, then we'll have a new order, so we do. So again, we're tracking our market structure. This high led to sweeping all of these, but then we've broken it. So we've had a break of structure here, coming lower. So these last up closed candles are currently an order block. If they fail, they will be our breaker block. Coming into a new 15-minute candle now. So this is 43, 44, 45 is opening here. So we're interested. We're coming to the end of the trading window at this point. Now a 15-minute fair value gap is currently being respected. So we're trading into the order block. This is much cleaner. So you can see here this breaker block, loads of price action through it. This breaker block, or this order block, we traded aggressively through it. We've traded aggressively back through, creating the breaker. So much cleaner price action. Inside this area, we do have a bullish fair value gap. This is also overlapping a bearish fair value gap. So where those two overlap is a balanced price range. We're into the open of a 15-minute candle, so you would ideally like a tap of that and then an aggressive move away. Stop loss would be below the low. So our confluences are that we've got a bullish fair value gap, we've got a bearish inversion fair value gap, creating a BPR. We have this as an order block. These down closed candles are now an order block because we've traded through them, and we've got a breaker block. And we are at the open of a 15-minute candle. So a tap of that breaker block will take us into the trade. We already know that we've got relative equal highs above us. I would be taking 50% of the trade off again at 1-to-1 to make myself risk-free as quickly as possible, given the fact that we've got so much red news later on today. Price comes, does not tap the breaker block. So no entry at this point. We're respecting this large fair value gap. So this is a large 1-minute fair value gap. You can see how we're respecting 50% of the fair value gap. So we've not been entered within the first 3 minutes of that 15-minute candle. So my eyes are now on 5 AM. We're engineering liquidity here. So we've got relative equal highs just beyond the 50% of this large fair value gap. So at the moment, this looks risky. I wouldn't want to take a tap of this when we're respecting this fair value gap. Price would be essentially coming from an inefficiency, which means that it would probably be seeking external liquidity, coming from internal liquidity to external. So it would likely run this low if it rejects this and comes down. So we want to see weakness in this fair value gap. We've created relative equal highs. This is the candle, so we get a closure now above 50% of that fair value gap. So this is the first sign of weakness in that bearish fair value gap. We've closed through these relative equal highs now. Just want to delete that off the charts. So our breaker block for me is still valid. The only downside at this point is we are at the end of the session. So I will stop trading at 5 AM. My trading window finishes at 5. So I will allow until 5:03 here, because I will allow 3 minutes either side of a 15-minute candle to get triggered in. So I want to be triggered in on the breaker block before 5:03. So we've closed over 50% of that fair value gap. This is giving me an indication that this is a weak fair value gap. We've been respecting this little bullish fair value gap here. We've got bullish fair value gap here, just above the breaker block. BPR, 15-minute fair value gap has been respected, so we didn't close through on a 15-minute candle, didn't close through that 15-minute fair value gap. We've got an order block and we've got a breaker block. So if we get tagged in before 5:03, I will take this 50% off at 1-to-1, aiming to fill the BPR on the 5-minute chart and that 15-minute fair value gap above us. We get to 5:02, 5:03, we are pulling away. So this is where I cancelled my order. I didn't take this entry. I've recorded this live, so we can jump to the live narration shortly. But we'll see the price does come back. 5:07, tap the top of the breaker block, 5:08. So I want to explain a little bit about the 15-minute cycles. You'll know that I want to get tagged in on 15-minute candles. We've got ICT's power of 3 in play here, and this plays out perfectly. So the ICT power of 3 is essentially we have a accumulation phase in a candle where price is accumulated. We get a manipulation phase where we sweep those lows. So this manipulates traders in the wrong direction, sweeping liquidity, and then we get a distribution phase before the candle closes. So this is how ICT outlines candles basically forming. So on our 15-minute, we have an accumulation phase. 5:04, we've got a manipulation down. So we've swept the low into the breaker block. This is halfway through the candle. So halfway through the 15-minute cycle, we are tapping this. So this is now our manipulation down. And you'll see after this tap, we then get the distribution phase. Manipulates us down into the breaker block. And then we have our distribution where we will be aiming to come take out those relative equal highs that we'd built here, that engineered liquidity, and ultimately fill the balanced price range. And then if we're looking for shorts, take us into a take us into a premium area where we have our other 15-minute fair value gap. And we can see now when we get in line with the distribution phase, it can be a very volatile price action, very volatile move. Straight into our take profit. So that was a really easy 2.1, aiming to get to that fair value gap eventually. And we have just closed through that fair value gap, bagging 3.3. I apologise about that. My daughter decided she wanted to drop in and say hi. So there was the analysis anyway, really textbook, unicorn entry. There's just some question marks over trading after 5 AM, especially given the daylight savings time discrepancy that I'm seeing this week. I hope you found the analysis useful. However, if you did, please leave the video a thumbs up. It really helps me out. If you've got any questions or comments, leave them down in the comments section below. It'd be great to get your feedback. And if you're enjoying this kind of content and want to see more videos like this, then please consider subscribing. I'm dropping videos like this every single day. It'd be great to have you on board. Thanks for watching. I'll see you again in the next video.